Hello. StreamYard says that it's showtime. So this is Total Growth Investing live stream for September 20th, 2020. It's 9 a.m. on the Pacific Coast. And let's see what we've got. If you're here watching live, please say hello. I can see the comments on any of the channels that I'm live on. And we'll see how this goes. I haven't been live by myself for a long time. And I've needed to do this, needed to touch base with the community for a while. And I'm getting reminders. And hello, Rennie. Okay. So what's new with everybody? What's new with the markets? Let's see. Let's move this out of the way. First introductions. Let's introduce my channels. Total Growth Investing is the page. You are more than welcome to post comments and add questions and post on the page itself, or send me a message through the page. You can talk to some of the people who have, and I answer quickly. This is a community to me, and it means a lot to me, so I'll do that. This is the pinned post, and that is a link directly to my ranking list. 673 stocks that I keep an eye on an almost daily basis. I've slipped a little bit, been busy, back to work full time, but I am not muted. Good. So let's see what else. Here's the YouTube channel. Torsten and I have been doing live streams about every week or every 2 weeks, but he needs to step back for a second, which is why I'm going live by myself this time. Torsten is the CEO and main programmer behind dividendstocks.cash and Aktienfinder.net in Germany, and he needs to focus on his core business for a little while. So he asked me to feel free to use the StreamYard that we set up. So that's what I'm going to do. And I'm going to promote dividendstocks.cash. In fact, the dividendstocks.cash Facebook page and YouTube channel are included in this live stream. So if you're watching, welcome. Please feel free to comment, and we'll see what happens. Dividend Growth International is still something very important to me. He has been adding a lot of stocks, which we will look at a little bit later, from all over the world, and especially in the Asian markets, because he found a good source of data in the native currencies for a lot of the stocks that are over there, and he wanted to include them because there are some really, really good stocks over there. As an example, in fact, let's do that right now. Let's see. Log in. Let's go to stock search, dividend screener. And am I going to stay logged in? I hope so. Yes, good. Nintendo. So Nintendo was a stock that somebody posted about in the Dividend Growth Investing group a little while ago, I think yesterday. And the question was asked, is it still a good stock? We could look at the comments that came up, but I want to look at the actual data. So Nintendo is a stock that he added just this last month, in July, on the 18th of July. So let's take a look. Let's see, change layout. So he has a lot of really good data here. Going back to 1991, which is part of the really good source that he found with good data going all the way back. Looks like they peaked in price around 2013. No, that's payout. Yeah, that's payout. earnings per share, free cash flow. So they had a spike in 2008, 2009. They had a dip, but then they decided to come out with a Nintendo Switch, and they've been going gangbusters. So take a look at operating cash flow going forward. Look at those estimates. All right. So the question was, is this a good stock to invest in now? My standard line is we invest for the future, not for today. So what about that future? What's the valuation of Nintendo? In original Japanese yen, okay, here's where they are now. And the estimates are way up here. So is this a good stock to buy? Well, based on the numbers that I'm looking at, yes. Let's take the middle of the two, the one based on adjusted earnings per share, and see what we would get. If we put $1,000 into this, what would we get? Capital gains potential of 742 and dividends of 55.85. They've been growing their dividends pretty steadily since 2016. That's the blue line that I will flash right there. It's going to spike, and the estimates are that they may come down a little bit because maybe the cash flow is not going to grow as much as they hoped. But just looking at the potential here, yeah, that's a decent stock. Now, Nintendo is an ADR in the United States. And what I found was, and let's see if I can actually find that. There's the group. Yeah, I'll find it and we'll get back to that. I'm out of practice on all of this. Where's the Nintendo? Let's search. There we go. I don't hear about much talk about Nintendo. There we go. So what I found, and I posted in a comment, is there are two ADRs in the United States. NTDOY represents 1/8 of a share, while NTDOF equals 1 share. We already looked at their valuation, and if they keep expanding the Switchverse, the Nintendo Switch, then I think they will do really well going forward. And who knows? We may be seeing the beginning of a Ready Player One world using Nintendo Switch. That would be fun. What else am I going to go for? So this is my website. This is very rough. I don't even have graphics on here except for the Facebook links and YouTube links down here. I created a quick video describing what you can find on this website for now. I have plans and dreams and almost no programming skills, so I'm looking at and reading books about programming to figure out how to connect it to a database. It's a fun project, but the real meat of the matter is the Google Sheet. So let's go to that. 673 stocks worth. 673. This is hard to maintain, but it's a labor of love because I know, look at that the community is always watching, always checking it out. What I kind of wanted to do today is look at some of these top stocks, and we'll get to that. But first, I want to show off yet another website. This is Rizoma, RIZZOMA.com. And this is it's a notepad collaborative. It's based on the old Google Wave, which is non-existent anymore, but this is the last app standing using that protocol. So I wanted to go over some articles and talk about some of these stocks. So let's do that. On Seeking Alpha, we've had over the last couple weeks a couple increases, and let's see, from the week of August 29th to September 4th. Here's the article from 30 that he came out with talking about this. Verizon. So I wanted to take a look at Verizon because they increased their dividend and wanted to see how it was. So let's go to TGI and bring up VZ and see where they are. They're at 563 and I last updated. Oh, that's wrong. I've changed my columns, so I got to fix that. Anyway, 563. Let's go down and look at 563. Verizon, part of the Dow, etc., etc. Let's split the screen. Go a little fancy. So this is how I update my list. I do a split screen and pull the data from Seeking Alpha. So they updated their dividend 0.625. That date. And the payout ratio is now 52.65. Pushes them down a little bit. Their dividend growth might be going up or not. Anyway, 2.15. Did I do that wrong? Yes, I did. 6. 2.15, 2.51, 4. And how are they doing performance-wise? 0.7, 5.49, 35.40, 90.50. 0. There we go. All right, so what did that do to their numbers? Up and down to 553. So they actually went up a little bit. Good stock. But for anybody who watched my original breakdown of how the ranking system works for me, you'll know that a 500 stock in the rankings means it's a sell. And it's certainly not a buy. But it is a good income stock. Let's take a look at their dividends and their dividend growth. So it's very slow in the 2% range, 2.5%, but it's pretty steady. They've been paying a steady growing dividend, not including that dip, whatever that was from, since 2000. Let's look at dividend history, going all the way back. Yeah, they've been growing a steady dividend, which is nice. And how about yield on cost? Is it going up over time? Yes. 10 years, 20, well, maybe not that great, but over the last 10 years, it's been good. So if you bought this stock in September of 2010, you'd be getting 7.75% yield on cost right now, or yield on deposit. So that's cool. But they increased their dividend. Dividend news, a 2% increase announced on September 3rd. What's the next one? Max. So Justin is also coming out with articles on Seeking Alpha. And for the week of September 5th through the 11th, 2 stocks came out with an increase, American Tower and Philip Morris. So let's see. American Tower is a real estate investment trust that is focused on the cell phone towers, and they've been doing really, really, really well. Let's look at momentum really quick. Yeah. Nice 10-year total return. Nice dividend growth. Love to see a stock explode like that. Yeah. Okay, they only started in 98. Let's go back to 10 years. How about dividends? The news was that they announced on the 10th a 3.6% increase up to 1.14. So I need to get my numbers updated. AMT sits on my list at 116. 116. So let's see. Let's do the screen split again. Take that and I got it. There we go. Let's go to the scorecard, and this is now 1.14 today. Payout ratio 57.83 because they increased it. How about dividend growth? So 20, same, no change. Okay, and how are they doing for momentum? Not as good. Two, three, four. So they are now down to 143. Okay. So anything in the 100s is a hold. Anything 1 to 3, 1 to 4 is a hold. Anything lower than that might be a buy if it's at the top of my stack. But 143, I think, yeah. So there's AMT. What was the other one? I believe it was Philip Morris. Yes, it was. Philip Morris does not beat the S&P. So I don't think that's on my list. Let's see. Nope, not on my list. So we can take a quick look at it. Dividend news, 2.6% increase announced on the 9th. Their dividend growth has been slow but steady, very slow. Their momentum has been less than spectacular. Meh. Looks like they peaked in June of 2017 and they've been going sideways since 2018. COVID didn't hurt them, but it didn't help them. All right. I have been remiss because there is another site that I really wanted to show. Let's look at AMT. Power. And stock cash. So this might say what they are going to do. And this really did catch my attention. Because this is where they are. Their stock price is $245.50. But what are they going to do? Where are they now? They are overpriced. Let's take this back to a 10-year view. So here's their fair value numbers based on all of the other data here. And their fair value is down here. They were last at fair value in early 2019, and they've been going off the races. So will their fair value numbers catch up to them? Maybe by the end of 2023, according to the estimates. So if you're looking for capital gains, AMT might not be a great stock. But if you're looking for dividends, let's just take this and say, what kind of dividends might we get? 79.46. That's not bad. And the estimates say that they expect it to continue to grow, which is cool. So that's AMT. What's their stability numbers? Dividend stability, 0.99. Earnings stability, 0.96. Cash flow, 0.97. Revenue, 0.94. All very good stability numbers. So this might be a really good income stock. Not for yield, not for current yield, because their current yield back here is at 1.76, which is not that spectacular. But for stability, yep. And for dividend growth, looks like high potential. And again, we don't invest for today, we invest for tomorrow. And if they catch up with fair value right here and continue to go up like this, because after all, it's cell phone towers, and the cell phone networks are going to continue to expand. If nothing else, to catch the SpaceX Starlink network and provide internet that way. With 5G, who knows what that's going to go. But there's AMT. Do we have Philip Morris on here? I do not know. Philip Morris, we do. Let's take a look at that too. So there's the peak. There's the going sideways thing. Oh. So the estimates are saying, the experts are saying that even if we buy it right now at 78, and let's take the middle, which is based on adjusted cash flow, we might get a decent return if the stock price follows the fair value. So an investment right now of 1,000 might get $483.99 in capital gains and might get $201.92 if the estimates for dividend growth continue. Their dividend growth has been decent. Yeah, pretty slow and steady over the last 12 years. So it might be a good income stock. How about the dividend safety? Pretty solid. They're a very mature industry. It's tobacco. So their payout ratio is pretty high at 95, but their entire reason for existing is to push dividends back to shareholders. So that's why they're earning money. That's why they're doing it in the first place. Dividend history, yield on cost is steady. Nice spike there. If you'd bought back in 2008, you'd be getting 9.49%. So from an investor's standpoint, income strategy, Philip Morris is not a bad stock. Because people will always be smoking. Some people will be. And they are a good company to figure out how to make a profit from that. Let's move on to another one. So Ferdy came out with this article, 10 dividend growth stocks for September 2020. Let's take a look. Here's the article. And he goes over his breakdown on what his criteria is, and then lists the stocks. So I plugged these into my list right here. And they're decent income stocks. I call anything in the 300 and 400s a decent income, but some of these are in the rank that I would sell them. Like 3M might be a good income stock, but it's not a good total growth stock. So down at 620. DTE, again, I don't know why this is loading. Google is just slow. 551. Travelers, 507. Pepsi down at 556, etc., etc. So Ferdy thinks that these are good. I think we can do a lot better. This article on investors.com from Matt Kranz is one that Monique shared. Where was that? There it is. So Monique asked this yesterday, and this is right up my alley. The most expensive stocks. Well, the stock price has been really high and going up really well. So what does this mean for an investor? Well, for me, it's an attractant. Because if a stock is really high priced and been growing for a good long time, that means that they might continue to grow. So I plugged these in and got much better numbers, really good numbers. Fair warning, though, a lot of these don't pay a dividend. I found that. And I found that kind of annoying. Like, if I hit refresh, will these darn names load? Maybe my bandwidth is overloaded. Okay, let's take a look at some of these. MasterCard, number 6. Visa, number 9 on my ranking list. So these are some of the top 10. Going down from there, NVIDIA. Let's look at NVIDIA. First impression, very high priced, but is it worth it? Well, looking at momentum, very high priced, but that's total return over 10 years, almost 5,000%. So if you'd bought Nintendo 10 years ago, making 5,000% is not a bad thing. That's really nice growth compared to the S&P, compared to just about anything. Will it continue? Yeah, 497 or 87. It's overpriced. But will it continue? Let's look. NVDA. Best way I know to see that is on dividendstocks.cash. NVDA, NVIDIA. What's their stability numbers? Dividend stability 0.97, earnings 0.78, cash flow 0.81, revenue 0.88. Those are decent numbers. So what happens here? Well, there's the super spike, and we are way up here at 487.57. The cash flow and earnings per share and operating cash flow and adjusted, that's in the shaded regions here. And you can see it's expected to continue to grow. But what does that mean for fair values? Well, we're overpriced. And looks like we will continue to be overpriced for a while. So this might not be a good time to get into it unless you're in it for the really long game. But if we look at what we expect in dividends, yeah, not much. So this would not be a buy for me. Everyone make up their own mind. But revenues and cash flow will continue to grow according to the estimates. So is it overpriced? Is it worth it? That's an individual decision. For me, it would not be a buy right now, but certainly something to keep on a watch list. And it is. NVIDIA sits at number 18. What's next? Market access. I know this stock pretty well. It was a number 1 on my list for a while. Market access. Current price, 438.66. Very similar to NVIDIA. It's overpriced, overshot the mark thanks to the big spike, but then we've had a micro.com crash over the last couple of weeks. So it's got down from a high of 537. Fair value is moving up. The earnings per share shaded regions show the estimates for cash flow and EPS, and that's continued to go up. but fair value based on those numbers doesn't quite reach. So what? No, very sensitive mouse. So you might lose capital gains and only gain a little bit in dividends. So for me, this would not be a buy right now, but the growth is really nice, and the dividend growth is something to write home about. This is an estimate. It's not real. You can see the actual dividend history up until the today marker. But these are the estimates based on these cash flow numbers, what they might pay in dividends and how that dividend might change and increase, by the looks of it, over time. So that's nice. Again, if you're buying this, it means you're in the long game, 10, 20 years. And if they keep growing, fair value might exceed where they are now and might keep going up. Market access is at 36. Next one on my list is a new one. Intuitive Surgical. So this is a new one on my list at number 90. And a lot of the new ones that I added from this list don't pay a dividend. So that's what I noticed. But as far as price performance, they've been doing really, really well. 10-year price up 564%, and a 10-year total return of 564.94. Well, it's the same number because they don't pay a dividend. I don't think Torsten has that on here, but let's check. Where are my symbols? Number 90, ISRG. I don't think it's on here. ISRG. Nope, it isn't. But they are on here. So here's the total return number. Their growth between 2016 and 2018 has been really nice, gone sideways, but then the COVID crash, they are a healthcare company and they're focused on that, so they've been doing well during the COVID crash. Go figure. Is this worth it? Oh, I don't know. They don't pay a dividend, so they're not high on my buy list, but they're number 77 if you're only looking at price growth. If you're looking for potential capital gains, they're at number 77. But they don't pay a dividend, so they're pretty, it'll take them a while. Maybe with good cash flow, they will pay a dividend. I don't know. What's next on that list? Dexcom was another one. PayC, these don't pay dividends. VeriSign, I don't remember if this does as well. Let's take a look. Nope, they don't. They did? They paid 2 way back in 2010 and 2011. So, all right. Comments. Hello, Frank. Top of the morning, Charlie. All right, CMCL. CMCL. Yeah, Catalonia Mining. I've been watching this one. The price is really low, but the returns have been incredible. I'm not sure if that is because of stock splits or, yeah, there's a stock split. 20 for 100. Okay, so 1 to 5. So they did a 1 to 5 stock split back in 2017. Their growth rate has been nice. Dividend history is pretty solid, pretty steady, with some specials. I know I have this on my list. Let's see where it is. Number 34. There it is. Yeah, they've been growing like crazy. Let's check the numbers. Dividend scorecard. And go back to there. 0.85 is the same. Let's update these numbers for today. They're in gold, which is doing well right now. Thank you, Federal Reserve. How's my growth? Minus 0.04, 20, that's the same. How about momentum? Let's update that. 16982, 220.66, 1540.05. So that dropped them a little bit. That's okay. So yeah, number 40. Decent stock. And if you want to get into precious metals, if you want to get into the materials, as gold continues to rise, thanks to the US dollar collapsing, might be a good investment. We shall see. And the price, the price is decent. 1940. That's decent. Hey, Monique. I'm just going over your list. Let's see, where were we? Let's actually bring up the article. There we go. So I am not a professional investor. I am not a financial advisor. I just look at markets and figure out what I want to buy. Price to revenue. These are, I guess, some pretty decent numbers considering. And this is a really good list of stocks. A lot of them are information technology. And I am overweight in information technology, so there's that. I do recommend you read the article. It basically lays out a good reasoning why a high price should not be a complete turnoff. Because these are stocks that have been growing like crazy, and they will continue. We're moving into the information age at a continuing rapid pace. We have been since the 60s, and now we're really getting in there. With 5G, with blockchain, with all the other stuff. Everything is going digital. So information technology is going to be huge. So Monique, thanks for sharing the article. Dexcom, I think that's another one that I wanted to look at. Let's take a look. Dexcom. Do you pay a dividend? Okay, they don't pay a dividend. So all we really have is the momentum. 10-year total return 28.16. That's nice. They've had a very recent explosion coming from a lull in 2017. Let's take that to 10 years. So they've been beating the S&P since about 2013. But wow, the last 3 years have been incredible for them. What is it that they do? Financials, overview. So they're in healthcare equipment. Of course. Medical device company focuses on design, development, commercialization of continuous glucose monitoring. Diabetes. There it is. I don't have access to the estimates. DXCM is probably not one that Torsten has. DXCM, nope, he doesn't. I might have him add it, but he wants the best of the best on the dividend stocks. So he's probably not. He'll add a couple, but he's been focused on Asia recently. Yeah, healthcare. They have a promising glucose patent. It seems it's been propelling them currently. Yes, it has. Really, really well. If we look at growth, revenue growth is nice. Compared to the sector, that's impressive. Free cash flow. Yeah, their growth has been incredible. You can see that in the standard momentum numbers. Let's see. Value. Where would I go to see earnings estimates? There it is. So a lot of things are under lock and key, but the earnings per share estimates for 2021, 325, as opposed to the end of this year, expected to be 2.63. Let's see, year-on-year growth continuing nicely. Forward price to earnings ratio. Lots of analysts following it. So lots of capital gains potential. What else was on that list? Any others in particular that you want me to look at? Matthew. Column that auto links to Seeking Alpha. Oh, well, okay. Way over here. Already there. I have two, actually. I have a link to FinViz and Seeking Alpha way over to the right for any of the stocks. It's formula driven based on the symbol. So you'll be able to go to any of the 673, go all the way to the right, and click to see the details on that stock. So hope that helps. And thanks for the question. If there's any other site out there that you would like me to build a formula to create links to, I can do that, as long as it's something based on the symbol. A lot of sites don't have that capability. I know that Torsten's site does not yet, but he's looking at that, maybe eventually. All right. Yeah, it's a big spreadsheet, but there you go. Let's see. If anybody has any more, please let me know. What else did I want to talk about? So let's see. Dividend champion and contender highlights. So just the previous week, we had a number of stocks say that they were increasing their dividends. And I put that on my what if tab right here. So these are the ones that increased their dividends. Microsoft, Realty Income, Texas Instruments, which is the very first stock that I ever owned. Let's see, Store. And I plugged in their numbers. Microsoft's at 60. Realty Income might be an income stock, but it's not a growth stock. 646. Actually, I'll take that back. Realty Income is a growth stock by my own definition. We talked about this in the group the other week. And I figure that anything that grows their dividend faster than their yield, faster than their average yield, should be considered a growth stock, while things that have a yield higher than their growth numbers would be an income stock. Just generalization. So in that particular case, Realty Income would be a growth stock. And let's take a look at why. Realty Income. Dividends. Their average yield over the last 4 years is 4.45%. That's a great income stock. Their dividend growth is matching that, 4 point something. So yeah, it's a good growth stock. Scorecard. This says 4 years, but Realty Income has been growing their dividend forever. Since 1995, almost every single quarter. So I don't know what Seeking Alpha's problem is. Whatever. Algorithm based. Dividend history. Look at that. Steady growth the whole time. That's where these numbers come from. Okay. Here's another one. WBA. I know that one. Walgreens. From a dividend growth perspective, fantastic. From a momentum perspective, not that fantastic. And I track both. So it looks like they peaked in 2015. They'd been going sideways until 2018. And this crash here has nothing to do with COVID. They've been having some trouble. And even with their dividend growth the way it is, if the price is going down like this, it doesn't help their total return. So you can see the total return over the last 5 years, over the last 10 years, it's barely even positive. Anybody who bought it 5 years ago is really hurting. Those are not good numbers. They're not going anywhere. They've got a 5% yield, decent payout ratio. They pay quarterly, and the dividend history is pretty solid. But I'm looking for both price growth and dividend growth. So WBA on my list doesn't rank very high, 560. So that would be on my sell list if I had it. And not because of the dividend, but because I'm looking for both price and dividend growth so that when I retire, I can look at my portfolio and choose the best ones, and I'll have a growing portfolio. If you're looking at WBA for growth, I'm not seeing it. So that's why it's not very high on my list. Just looking at this, you can't trust them to increase the price. Maybe they're in a 5-year lull. Maybe they'll start coming back. But until I see it start to happen, I don't want to put my money into it. So I hope that answers your question. Let's see. Top ranked stocks. I've gotten really busy, so I have not been able to create new video reviews on my YouTube channel for any of the top stocks. You can see that the live streams have taken up. The last big review that I did was on the energy sector, and the next one that I'm planning to do, that I want to do, is on semiconductors. So SMH, and I've started building the spreadsheet for this, or the PowerPoint presentation. It's number one, and it's just an incredible ETF, and that's what it is. It's an exchange traded fund that is focused on semiconductor equipment manufacturers. And we are going into the information age. So I'm not surprised that this is going crazy. Let's look at no, he doesn't have ETFs. But we went over, let's go back to the channel here. So we went over the best dividend stocks in the semiconductor industries about a month ago. And SMH is a compilation of a lot of those stocks, plus a lot of others. If we go to SMH, And see why I'm so excited about this one. That's decent. It's not a 10x, but it's all green across the board, notwithstanding the last month, whatever. The growth has been incredible. And this is an ETF. Now let's look at dividends. Dividends on ETFs are usually not that exciting, but I would call that exciting. That is a heck of an increase. And it's because the components, their holdings, have been paying out gangbusters. They've been doing really, really well. A lot of these stocks are in the top of my rankings. AVGO was number one at one point. ASML holding I actually did a review on because it was in my top 10. Where is it now? ASML is at number 13. Okay. Let's see. I know that Cintas was really high on my list. Here's their sister company, the ASM International, at number 46. And they've been doing great. Taiwan, we talked about this with Torsten. That is an incredible stock. Let's look at that one on dividend stocks.cash. No. Taiwan Semiconductor. Let's look at stability numbers first. 0.90 for dividend stability, 0.96 for earnings stability, 0.96 for cash flow, 0.96 for revenue. This is a very solid company. It's green across the board. And what are they doing? So they're overvalued right now in Taiwan dollars, but the fair value is catching up. Maybe not a good time to get in, maybe after another dip if they have one, but if you want to this is off to the races. And they're an international provider of semiconductor equipment and semiconductors. So they're doing well. And that is the number one stock inside SMH, 13.82% of it. NVIDIA, we've already looked at. Intel, we know about. They're stumbling a little bit because of the 7 nanometer thing. AMD is not stumbling because they figured out how to do 5 and 3 nanometer. Texas Instruments is one of the ones that increased their dividend. Applied Materials is another one that I did a review on. That's number 10. So SMH is a really good way to get a very focused investment into the semiconductor equipment technology sector industry thing. And I think they're going to continue to do really, really well. So if you're looking for a good way to get in, hopefully 168 isn't too high, but I would expect this to continue to grow because the components are going to continue to go like crazy. What else we got? One of the technical analysis guys I follow sees upside in TSW to the 90. Well, where are they right now? Texas, Taiwan Semiconductor. They're at 80 and 96. Yeah, I can see that. I can see that. Revenue estimates, 44 in 2020, 48 in 2021. Yeah, I can see 98 or 96. We'll just have to see. Okay. So I'm going to cut this one so Torsten can use the StreamYard. Thanks everybody for following. And please jump over to his if you speak German. And we will try this again next week. And I will see you all later. Please post in the comments if you have ideas for what I can talk about, articles to look at, stocks to look at. Please like, share, and do all the social media things. And we will see you next week. Next up is Torsten. I'll talk to you later.